Chagee, 6,681 stores worldwide.
Will Chagee become the Starbucks of tea globally? Chagee, with a ticker symbol of CHA, is listed in the New York Stock Exchange called NASDAQ. They position themselves to be like the Starbucks, right, of the tea espresso. Very high-end tea. And their IPO date is on the 17th of April 2025. The IPO price was US $28. And thus, by selling some of the shares, they raised 411 million to grow the business. The founder of Chagee, called Zhang Junjie, look pretty young. Let's look at the three financial statements, and we're going to focus on this profit and loss statement. Profit and loss statement consists of three components. You take the revenue minus all the expenses, you end up with either profit or loss earnings, or sometimes known as the net income. Now remember, for a company's revenue, we want it to be uptrend. So in this case, uptrend, bearing in mind that since the company has only 3 years of financial data, which is 1, 2, and 3, starting from 2022. So I personally find that the data is still a bit short. So remember, revenue is vanity and profit is sanity. So let's look at the company's profit. Out of 3 years, 1 year the company is losing money, and 2 years the company is making money. So at least for the last 2 years, it's still not that bad. Huh? Now, so if I look at the quarterly profits, it seems like most of the dots are going up, so it's still rising. So overall, as of now, it's still a good trend, except that they only got 3 years of financial data. The other one, we need to look at the cash flow statement, because sometimes the profit goes up, the cash flow doesn't go up. Cash flow from operation. Now, this line has to go up. So what does it mean? When this line goes up, that means cash are coming in when they sell keys. Yeah, so the better the predictability, the trend, the better it is. So as of now, the company is profitable, cash flow is coming in, all looks nice. Huh? How about the company's debt? Do they have high debt or low debt? That's when we look at the balance sheets. One thing we want to focus on is this debt to equity ratio. We want it to be less than 0.5. Now, if it's less than 0.5 or less than 50%, what does it mean? It simply means that every $100 of shareholders' capital that it invests in the business, the company cannot borrow more than $50. In this case, if you look at the most recent year, it's only 0.13, which is less than 0.5. So the company has low debt. Now, if you look at this share price over here, remember the company went IPO on the 17th of April 2025 with a share price of $28. Now, as of the recording of this video, which is on the 27th of August, the share price is actually $23. So interestingly, even though the numbers go up, the share price came down. In fact, the share price declined by 21.74% with reference to the IPO price. So remember, from a value investor's perspective, we want to buy something good, predictably growing, and at a cheap price. So what do we mean by cheap? Now, there are many ways to see whether a company is cheap, and one way is to look at a company's PE ratio. And a PE ratio alone actually means nothing. So you have to compare its company's PE ratio with other competitors' PE ratio. So the lower, the better. So if you look at this graph over here, as of data 27 August 2025, now these are the PE ratios of various drink companies, Starbucks, Luckin Coffee, and Chagee. So if you look at all this, it seems that Chagee has the lowest PE ratio. Interesting, huh? Quick summary. In terms of revenue, the company is uptrend, but remember there's only 3 years. Profit, 1 year is negative, the rest uptrend. Cash flow uptrend. Debt to equity ratio pass, because less than 0.5. Share price fell by 21% since the IPO price of $28, and the PE ratio is the lowest among the 3 companies that I shared, which is much lower, in fact, by Starbucks. So I just want to hear your perspective. Would you invest in Chagee? Please comment on this video politely and respectfully, and I shall see you in the next video. See you soon. Goodbye.